Hey folks, so I'm going to run through this very quickly. I'm going to attempt to run through this very quickly and just give everyone an update on the newsletter. That's all this is going to be about, is the newsletter. At the end of it, there may be something else I'm working on, but for right now I just want to focus on what's in the newsletter. So what we see happening here is we see it's respecting this level, right? We talked about this key level, and it's acting like a shelf. And if we drill down into it, this is the SPY for those that didn't see earlier. But you should be able to recognize these charts by now. But you can see what happened here. The close was the high, right where this is. So we're having a little bit of resistance right around that 384 level. I expect that to clear itself out. Look how these things are getting smaller and smaller. These bases are getting smaller and smaller. As that happens, that usually leads to a much, extended move higher. Let's see what happens till you get the wide bars, and then we come in. So I think the slow grind continues. It's a huge earnings week this week for tech, but I think the slow grind continues. But this is the leader, and this is where the action is. So this is a typo. It's actually 323.88. So what we're seeing here is on that open, or rather on that close, on the Qs, what happened? We tested and held. Now we can't even get to that level, and we have an inside day on the Qs going into one of the largest tech earning week. There's Apple, Microsoft, Facebook, Tesla. I mean, it's a busy week. So I expect this to be somewhat active, to say the least. The way to trade it is TQQ, either long or short. My personal opinion is avoid the SQQ because of the way that it trades. If you're thinking about putting on a hedge or shorting it, whatever, stick with TQQ. It's more liquid. And I see nothing here, but we talked about this wedge Tuesday night. It did exactly what we wanted to. Wednesday, Thursday, Friday. We had a good week. And this is the leader. So IWM, we had a solid reversal bar, and then we closed above the 5 and the 8 after it testing here and trapping in these levels. We got a little tiny wedge going on here, right? Just a little one. So let's remove that arrow so you can see. So you have a little wedge there. I do like the encapsulation of this bar. Gives us a bearish engulfing closing at the high going into Monday. So this might not give us this opportunity. And if it doesn't, that's okay. There's hundreds of other things that we can do. So CEH, let's just review. We had the huge, let me get rid of this. Remove this segment annotation. Okay. So we had this huge run up, and we talked about this, and everybody trades differently, and I'll say this as advice. It's basically a roadmap on how I trade. It doesn't mean that this is how you should trade. Everyone needs to follow their own opinions. So think of it as an opinion. So I got a lot of people that were saying, "Oh, when this happened, that they blew it out." That's fine. It'll eventually it will give us another entry. My point was, I know that I'm not going to be able to buy it back here. So with that cost, it gives me a lot of flexibility to stay in this trade. Now, the people that sold here for right now, and 67, 68, they're feeling pretty good about themselves, and that's great. Congratulations on the trade. I think we almost had a double on this one. So, yep. So, but look at this bearish engulfing bar that's going on now. Look how we had follow through, but then we don't have that third black crow, that little pattern we talk about, them trying to instill in you. And instead, we have an inside day where we close above this level. So we could actually see a reversal here, right off this little double top. And I'm going to get more specific about a smaller group of stocks, just the newsletter stocks today. So you see what I'm saying? You should be able to see this. Look at that double top, right? So if we close above that or get above that, that could be a swing trade. a shorter time frame with this as your low, but this could really push. There's an enormous channel here that's just going higher and higher, and it's nothing for us to see 75.80 on this. Really right now, and that was where I'm going with this. I can see, the stop's been moved up. We haven't broken it. We haven't come close to it. More conservative accounts could get stopped out at the 5-day average. That's happened. If you're stopped out, congratulations. To me, we talked about this on Tuesday, these longer bars, but what we're going to see now is that's our new target, $75. I'm happy with this action. We round up, consolidated, came back, and now we're building to go higher. So right now, we're staying with the idea, and it's $75 target. Message me with questions about that if you have any. So DM, we're just going to walk through it, right? These huge swings, and we stated to trim here. And you can see since we've trimmed here, we have 1, 2, 3, right? And what can't we do? What are we having a hard time with? This level. So I'm at a crossroads here. I'm going to give it a little more time, but I might just tell you to blow this out if it can't clear this. It needs to clear this. If it doesn't, we have a major double top on a daily chart with this being major support. Too much risk reward. So it's got to do what it's supposed to do. If it doesn't, it's going to get eliminated. That's it. So GRWG, this is where we entered. This is where I said to trim. And then we're talking about this bull flag that's forming. But let's just review it, okay? We've moved our stop up. We're still up substantially. We're up about 15 points here on a $35 stock. But we can't really close above that 53.43, can we? So now we're just in a wedge. And now this 5 and this 8 are rolling. Now, it's at the end of the world, but let's watch what's happening here. And let's honor our stop. I think it's worth the $4 to stay in this and see if we can hold this 21-day. That's just my opinion and how I'm going to trade it. But building this flag, this thing's setting up to push higher. And I believe this is one of those expert short sellers that told us to short around 15 or 17. So I don't know the short position off the top of my head, but that would be something for everyone to look at. FCX, we got in around 27.25, and we've traded up. I'll go to the monthly, even though it's not the end of the month. But this is where we entered, right? And this is our target. Okay. Again, this is a massive 10-year breakout, right? Massive. I mean, it doesn't get more massive. So keep that in mind. This is a secular change that we see going on. And that's why I'm in no hurry. I'll just honor my stop, and my stop is my cost. So this is the weekly on it, but you can see how we don't even break the 5-week. And we are having trouble with this 32.50 level, and we'll see how we come into the week. But, with what I think is worth noting is compare this to the IWM, right? And you'll start seeing that small caps are trading like commodities in their pricing. And people were asking me about that as far as sectors and indices. So if you look at FCX and then you look at the IWM, I mean, this bar is almost exact to what the IWM did, right? As far as opening at the low and then rising. So we've tested this 21-day, and what happened? We bounced, and we closed near the high, and I expect continuation. If we don't have continuation, we just blow it out. Okay, so we've been in this for a while, 16, and what we've done with it, we got in here off this broken wedge, and what we've done with it is when we were up like 3 days and everyone's high-fiving one another, we trimmed, right into it. So, let me explain this really quickly. The reason you trim into these huge pushes up is because you get positive slippage, right? If I'm selling into this push, I'm going to get a better price when I go to sell because there's huge demand, okay? Then if I'm trying to sell here, I'm going to get slippage, right? This way I get positive slippage. That's what I want. I don't want to be selling here. Well, we opened here and then we sold here, I don't want to be that guy. I want to trim into these huge rallies. And then that allows me to, honor my stops and also to see other places where I may want to enter, right? Like you could have entered here perfectly and used this as your stop, 65 cents, and then gone from there. So we can get into different additions later. I'm trying to stay focused. So here's your all-time high close. And what do? We're not able to close above that. So this could be getting toppy, and we could be, and I say could, I'm not saying we are, we could be forming a little wedge here that we need to watch. But overall, we've trimmed. We have our stop. And right now, we're up $5 on a $16 stock, and let's just rock and roll and hold it. So net we got in right here. We haven't trimmed it yet. I don't see a need to. These two peaks, right? You can see this wedge. So you see this wedge. So just watch this. We break 86 and a quarter. This thing's going to rock and roll. I mean, you can just see it. Get rid of this now. But you can just see it. We're going to get through that, and then we're going to push and stay in this channel. So I'm sticking with this, and I'm sticking with the trade. NIO, congratulations to the people that took this opinion, and then I appreciate the, thank yous and everything. But you guys did it. I mean, you guys are executing the trade, not me. You guys are executing your process, and that's why I keep stressing, please look at your process. I don't know why this is BP here, but we're going to remove this. I have to clean these charts up if I ever find the time. So this was our first entry point. Boom, 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 boom. And then we break out. Man, I get a ton of messages. Sorry. You go through here, right? And now look. This was where we trimmed. Okay, and then we were here for battery day, and some people blew out and told me they blew out. Congratulations. We broke this wedge. We were concerned about it, but what did we do? Test. One close below it. Test, test, test. Can't close below it. Formed another wedge under it and broke back into this channel. In 4 days, we wanted it in 3, but it did it. And now the open was the low, and the high was the close, and the volume starting to come in again. So I'm very comfortable with the $75 target price. I'm very comfortable with this buy point. In regards to the second buy point, and please listen to this, if you're in at 59 and a quarter and you followed the second one and you're in at 48, my advice is relatively simple. If we close below your buy point, just get out. Get out of it, hold your existing position. Because if it starts to come down and you have like twice the position that you once had, you're going to get hammered and you're going to lose all these gains. So number one thing, protect your capital. So put your stop right below the low of this bar. And if it hits it, get out. That's fine. And then we'll just look for another opportunity. So this is like the little engine that could for us, right? I mean, we've been in it and we keep thinking we're going to get that breakout. And we've been in this one a while. I don't see a reason to move it, but this little arrow is not doing what I want it to do. Let's use this one. I don't see a reason to move it, but you got a little wedge here. And then as soon as we tried to get above this little high, you can see how it was rejected, right? You can see how it was rejected. And we'll go from there. But you can see that. So this 75.44 level, get above that, and we could go and pop back into this channel, continue our rise. I mean, we haven't even trimmed this. There's really no reason to. I know when we're up 20%, we say to trim. The reason on these spikes why I haven't even brought it up when we have been up 20% is because look where we are in regards to the 50-day, the 21-day. I mean, we're right there with support. So to me, we're not going to get another shot at this. This is either going to go or it's going to break. So I don't feel the need that we need to be out of this. We've been in this for a huge base, and let's see if we can get a real big push, and then we'll trim into that. So we were very fortunate on this one, buying it at right here, and We did, we had a little pattern and we had the volume and there's some other things, this undercut, which we talk about all the time, and then we push, right? Boom, boom, boom. Netflix has good earnings. This was exhaustive, and this was an exhaustive gap, right? Up, here we gap up, close it to low. That tells you what the next day is going to be. I mean, it pretty much telegraphs it. You're going to open right there, and then you're going to test the 8. We're testing the 8, and we're testing. We can easily, and I'm saying this for a reason, we could easily test 407. And I have no interest in this stock in seeing 363. And all I have is air below me. So I'm going to take this, right? This is going to be my stop. I'm hoping I get this push and I keep going. And we could with certain things that could happen, and this can keep going. But if I break this level, I'm gone. So Uber, we had a tight stop on it. We moved the stop up based upon the negative action, right? We're out. We lost $1.25, whatever you lost. It is what it is. At one point we were up $3-4, and I did not recommend moving the stop up. I felt very comfortable with this volume, and you can see this volume right here. I felt very comfortable with this volume that we were going higher, and that was not the case. So segment property, put the little arrow there. Okay. So I was very happy with that, but that's enough. It didn't work. Next. So XPEV, and let me just touch base on this. So when we recommend a stock, or when I say this, we have to look at the stock. If you get stopped out, doesn't mean that it's over. It means you can look at it, and you should be looking at where these levels are, and we can get more into teaching those levels as time goes on. But what's really important is that you have a plan and process. So even here, when we bought and then got this and then reversed, right? If you got stopped out, so what? I mean, there's a couple other setups here, right? You're undercutting this and you can't close above it. You're bouncing off this wedge line, and now you're running into all these little resistance points. So this was a fairly easy get back into. And I am working on something where information can be delivered faster instead of just the newsletters, but like instantaneous. So like if I see something, I can blow it out to people that have the newsletter a little faster. And I think that may be helpful. And it's also something that, if it goes to your phone or your email, if that's what we decide, then it might be a little easier for everybody instead of logging on Twitter. I'm just not sure yet. I'm looking into it. So, but what you see here is just respect this. And then what's it do? It tries to break out again. Doesn't clear this yet, though. When we clear this, right, and you can even see it here, right? When you clear these levels, right, actually that's even a better one. Let's remove this horizontal line. Because this one, we have the peak here, and then we have this. And then we can see how it can't even stay above that. So there's obviously a seller in here. So we need to break above this level, and when we do, I think we're a $75 stock. So I would be in this one, and I would use my stop, and I think it's worth the risk. So that's it to the newsletter. I'm going to try and put an addendum to this with an idea that I'm working on for a new buy alert, and I'm going to try to get it out sooner. So we'll see how that goes. So that's it. Any questions, let me know.